Now, at the same time, we have former President Trump taking crypto donations and making a pledge to uphold the rights to self-custody in the digital asset realm. This is huge and reinforces the notion that this is becoming a campaign election issue. And for young people in particular, it's a very important issue.
Hey guys, welcome back to Everyday Finance. In this video, Cathie Wood discusses Bitcoin and crypto. Ark Invest's founder, CEO, and CIO, Cathie Wood, maintains a consistently pessimistic outlook on the US economy. In the years 2024 and 2025, in a recent post on social media platform X, Cathie expressed concern about the current search for cash and safety in the US stock markets, drawing parallels to the challenging times of the Great Depression in the early 1930s. In our opinion, the current search for cash and safety in the equity markets is comparable to the intensity seen during the Great Depression in the early 1930s. During that time, fear permeated the market, but eventually dissipated, leading to a broadening of the market and rewarding risk-taking. Similarly, in the fourth quarter, the bull market in equities expanded significantly as the Fed's dot plot indicated lower interest rates. However, this year has seen the opposite trend. We believe that further price deflation and lower interest rates will activate equities that have been waiting to rebound. This will be discussed in the upcoming episode of our monthly broadcast. Cathie shares some important economic indicators and market signals that she believes indicate challenging times ahead for the US economy and the markets. Cathie is particularly concerned about the increasing number of bankruptcies and retail closures. This development is quite significant, considering the closure of numerous brick and mortar retail and dining establishments across the United States in recent months. These closures can be attributed to various factors such as inflation, stagnant wages, and higher borrowing costs. According to data from retail tracker Corite, there has been a 24% decrease in these establishments. There has been a significant increase in store closures in 2024 compared to the previous year. However, it is worth noting that some retailers, such as Dollar General and 7-Eleven, are actively planning to open new locations nationwide. Corite reported a 4% decrease in location openings compared to 2023. Cathie cautions that despite the official narrative of a stable US economy and markets, there are emerging indications of potential troubles that could potentially lead to a significant economic downturn. And lots of things Cathie Wood discusses, so please watch the video to end, and share this video, and subscribe our channel Everyday Finance. Thanks.
Interesting thing from an innovation point of view that has happened on the fiscal policy front or on the legislative front is that SAB 121 and FIT or FIT 21, both of those are crypto legislation that actually passed through the House. FIT 21 stands for Financial Innovation Technology 21, the 21st Century Act. Now, the first one was vetoed by President Biden, and he considered it. I'm going to look at my notes here. Inappropriate, inappropriate constraint on the SEC. Which needs to put guardrails on such innovation in order to protect consumers. FIT 21 passed in the House with 76 Democrats voting for it. The SAB 121 passed in the House with 21 Democrats voting for it. This is very important. Crypto or digital assets has become a single issue vote for many people out there. And clearly, these Democrats have been getting the message, because the party had been reticent to vote for anything crypto-oriented. Elizabeth Warren and Bernie Sanders and others having had such a big impact on that side of the aisle. Now, at the same time, we have former President Trump taking crypto donations and making a pledge to uphold the rights to self-custody in the digital asset realm. This is huge and reinforces the notion that this is becoming a campaign election issue. And for young people in particular, it's a very important issue. So this is progress. This is the three branches of government balancing one another out. The executive branch, President Biden vetoed one of these bills.
The Bitcoin price experienced a significant drop on June 11th, with a total of 20,600 BTC, worth $1.38 billion being accumulated. This was identified as the largest inflow day for Bitcoin whales since February 8th, when spot Bitcoin exchange-traded funds, ETFs, were still relatively new. During this period, BTC approached a new all-time high, and the flows into Bitcoin whale accounts ranged between 1,300 and 2,200 Bitcoin per day. As the price of Bitcoin fell from $71,500 on June 7th to around $69,000, the market witnessed another significant plummet. After some time, there was a significant day where a large amount of Bitcoin, totaling 20,600, was transferred to whale accumulation addresses on June 11th. However, the data for June 12th has not been updated yet. This sudden influx briefly affected the price of Bitcoin, surge following stronger than anticipated results. At the time of writing, the United States Consumer Price Index reveals that Bitcoin is currently trading at $677,500. This coincides with a decrease in Bitcoin supply on cryptocurrency exchanges, which has reached its lowest level since December 22, 2021. According to on-chain intelligence platform, this decline in Bitcoin reserves often signifies a strengthening. Investors are eagerly watching the market, hoping for a positive trend in prices over the medium to long term. One particular asset that has caught their attention is Ethereum. According to industry analyst Ali Martinez, recent data from Santiment shows that Wales has made a significant purchase of over 240,000 Ethereum, valued at nearly $840 million at current prices. However, unlike Bitcoin, the supply of Ethereum on cryptocurrency exchanges has been on the rise in recent days. Currently, there is approximately 17.98 million Ethereum, worth $63.1 billion, held on cryptocurrency exchanges, as reported by Santiment. Let's get back to Cathie Wood interview.
And then the judicial branch has basically said to the SEC, you are out of line in a number of cases here, very notably the Grayscale case, which ushered in the spot Bitcoin ETFs, of course. And so we're focused on it and happy that it's an election issue, as these pieces of legislation pass the third branch of government, at least one part of the branch, that's the House. It remains to be seen if the Senate will take up the Fit 21 Act. It is an election year. A number of Democrats are voting now on the side of crypto, understanding how important it is to a significant portion of the electorate out there. So that's the most important thing that's happened on fiscal policy. And normally we're not talking about innovation when it comes to fiscal policy. We're talking about taxes and spending and so forth. And those are campaign election issues. But we'll get more into those as the campaign year progresses here. So let's move on to monetary policy. You can see here, this is a chart that we've presented regularly because we wanted to track how inflation, how correlated it is to money supply growth. So here you can see M2 money supply growth in the purple line, and it had a burst during COVID as the Fed was trying to make sure we did not go into a depression and tried to provide liquidity to the economy. Hit 27% and has been decelerating ever since. It descended into negative territory in 2023. And actually, I'm sorry, this has been pushed ahead. It descended into negative territory in 2022. This chart has been moved ahead because money supply leads inflation. And so you can see the green line, which is the CPI on a year-over-year basis, has paused in here. It's been kind of stuck in the 3 to 3.5% range. And of course, the markets, certainly this year, have been very upset by that because the Fed is saying, hey, unless we see 2% inflation, we're not going to cut interest rates. Now, what we believe has happened here is companies are losing momentum when it comes to unit growth or volume growth. And they've tried to offset that, especially the impact on margins, by raising prices or trying to raise prices. And what we're learning from earnings season is they're not getting away with it. The unit growth has gotten worse for many companies. You raise prices, consumers now on strike are saying, no, we're not doing this, or we're going to trade down to store brands, which are much cheaper. And so what we believe will happen now, and we're hearing this, we're hearing Walmart, Target, Costco, Best Buy, many stores saying, we are cutting prices. Certainly those companies who reported through the quarter ended April, and most retail has their fiscal quarters ended April. We're hearing a lot of price cutting talk. And so we believe that will show up in the statistics going forward. And you'll also notice maybe that gas prices have started to come down again because oil prices have cracked. And you may have heard that OPEC is saying that starting this October, it is now going to expand production again. And so the futures markets are saying that oil prices and therefore gasoline prices will continue to come down. So that will help in the near term as well. As we've been saying for some time, we believe that inflation is going to turn into deflation. In other words, prices will not be rising on a year-over-year basis. They're high and they are still rising. The consumers on strike, monetary policy, we believe, is still restrictive, and we think prices are going to crack. And that means they'll go below zero. And you see on this chart, that's where money supply has been pointing. You can see that for the first time in April, money supply on a year-over-year basis turned positive. Now it's only up 0.6%. So that doesn't, if you knew nothing else and said, okay, money supply is correlated with GDP growth, you would have expected GDP growth to go negative, and that would include inflation as well.
The United States Federal Reserve has dismissed the predictions of technical analysts who believe that Bitcoin will soon surpass its all-time high of $73,067 by nearly 25%. According to a post by a technical analyst on June 12th, the target price for Bitcoin remains unchanged at $3,832. The analyst used the Magic Bands model to predict future prices based on previous cycle peaks and bottoms. The model operates under the assumption that once Bitcoin surpasses its previous all-time high, it progresses to the next level based on past cycle patterns. According to the model, Bitcoin is currently showing resistance. Once it surpasses the consolidation period at level 2.5, it is expected to reach level 3 at 91.539. This will be followed by a cycle top target of $123,800. If it increases to 91.539, it would represent a 34% spike from its current price of $68.0315 according to CoinMarketCap data. It may take some time to reach this level, but it is the next step in the prediction. This prediction was made despite concerns among other traders about the Fed's hawkish tone, which refers to a more aggressive stance by the Fed to control inflation, including fewer interest rate cuts. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.